type of thing. So be a little bit different maybe than if you had a doctor or somebody like that, an epidemiologist come in. So I'm going to start off with a few set of slides that really I didn't develop for this session. I actually developed it for a session that was prior to this pandemic, and I'm going to go through these slides and then I'll tell you how long ago this session was that I put these slides together for. So when talking about why a severe scenario could happen, and here we were talking about influenza pandemic. So there's a couple of references that are specific to influenza as opposed to coronavirus. But one of the things that we were talking about was the supply chain constraints. Within healthcare, that's the flattening the curve, making sure that we have enough care for people who are sick. But we were also worried about food, being able to get enough food to everybody who needed it. You're also a little bit worried about energy and other services, and kind of who was going to work at those times. So you're also worried about virus mutations. That's a real hot topic today that we'll come back to in a little bit. But the vaccines and things like that, the mutations are actually, they're random mutations, but they tend to aggressively pick out things to work around the vaccine. And it's interesting that the different mutations around the world, the changes that are going in to the sequences are similar. They're not exactly the same, but no matter where you're at, it's kind of recognizing here's how the vaccine is working against me, and so I'm gonna try different things to work back around it. We certainly had at-risk populations. You had comorbidities, and that's been true with this pandemic as well. A lot of the socioeconomic things, we've been getting a lot of discussion about that in the last year. It's not a new topic. It's something that was well on the radar screen back then. And I would argue that we've chosen to ignore a lot of these questions over time. So let's shoot on some of the issues that we saw. And this is one, and it's far enough back to where some of these I need to adjust a little bit as we're talking. But one of the things I was worried about at this point was the just-in-time supply system. We were told that oxygen and gloves and things like that were delivered to some of the hospitals in New York. They were delivered like twice a day, and there were no backups within the hospitals. It was all, if the supply chain broke, you were out of oxygen right away. And for the most part, in the current pandemic, we've worked through that. I mean, we were short on ventilators early on, but of late, I know California had some oxygen issues, but most of the supply chain issues have been PPE related, things that weren't the just-in-time part. It was the international part of the supply chain. So it's a little bit different view of supply chain than we were thinking about in the past. We get into same thing for individuals. And then one of the questions was, how would delivery work? And of course, that's just worked wonderfully, and this is long enough ago that I don't even list Amazon on here. And then we were worried about pockets of social unrest. And there's been a lot of discussion about whether, the Black Lives Matter period last summer and beyond, whether that has whether it would have happened without the pandemic going to the same extent, which is interesting. At that time, all our backup plans relied on the internet. One of the things that I had suggested was that companies keep up their VPN, because it might be that the internet goes down because it's too busy. But that if you still had a phone, a landline phone, that might be the only way for you to connect to your system. Now, what's actually happened in this last year has just been amazing in terms of, we're all working from home, we're on Zoom. We were talking about that a little bit before the session started, to where that's been a real success story. And then a lot of the allocation questions that we were aware of at this time are still there today. How do we allocate vaccines? Not every state, even this year, is doing it the same. There's a CDC recommendation, and most of the states are following it fairly closely. But what you're doing in Minnesota is different than what we're doing here in Nebraska. Hospital beds, same thing. If you have somebody, if you're not able to flatten the curve and your hospital beds are full and you have new people that are coming in sick, are there some people that are in a hospital bed that you would ever kick out? If you've got a 95-year-old person that's in the hospital bed and has been there for a month and taking up a bed that, let's say a 30-year-old was coming in that needed that bed just for a couple days, those are tough decisions. And then, we saw the ambulances in New York City become overwhelmed. And the biggest shortfall that I've seen this year is the nurses and doctors. It's just been extremely stressful on them. I know I had been worried that they would, especially the nurses. A lot of the people who go into nursing today are looking for that 9-to-5 job that then they raise their kids and spend a lot of time with family. And so I worried that if the hospital was becoming infected, would they come into work? But they've just really stepped up and done a great job. So, and then the other thing with the pandemic is that when you have a hurricane, you have things that are broken that need to be fixed, and so you have that natural built-in recovery and GDP boost, but you don't have that necessarily with the pandemic, and certainly not to the same extent. So why a severe scenario wouldn't have happened? And this is pretty basic. We've got intensive care units, much more so. A lot of the reference here is back to 1918. We understood germ theory much better now, didn't understand it at all back then. And then we have different drugs. And at that time, and I haven't heard as much coordination as I'd like to hear between the veterinarians and people that treat humans. I think that's another place. We're seeing that on the antibiotic side, but because these are all zoonotic diseases, I assume and hope that there's people in the background that are talking back and forth, because that's huge too. So impact on poverty, going back to 1918, we think about where the really big death count came from. And a large percentage of it came from that combination of India, Russia, and Iran, where they had up to 10% die. And they don't have good enough records, so they don't really know. So, when you see the overall global numbers from a century ago, you'll see it go 50 to 100 million. And it's like, well, that's an awful big spread, but they just don't know. And it's all because of these types of countries, a couple others in addition to that. And we've got the high risk, and this was in the past, but today as well. So I had spent a lot of time, and I'll share too, it was after the SARS crisis, where, Asia was heavily impacted, and in North America, it was really Toronto was heavily impacted, and the rest of us really just monitored it. But coming out of that, when I was looking at the risk to insurers, and there was an SOA research paper that Jim Toole did, that I was on the oversight group and worked a lot with Jim on, and we came up with these different risks that you would worry about that, in my mind, should have been part of every scenario plan process that an insurer would have. So you had your obvious, the insurance risk, looking at morbidity, looking at mortality. You had your economic risk, with the likelihood of a recession, where were you going to, if you had a run on the bank, where was the liquidity going to come from? I always worry about the reinsurers' solvency, mainly because there's a lack of transparency. We just, we enter into contracts with them, but we really don't get the information that I would like to see. I'd love to see their cash flow testing, their ORSA report. before I do business with somebody, and you just aren't allowed to do that. So there is a counterparty risk there. And then the other thing that was worked on a lot back in 2005 to 2010 was the business continuity side, and in terms of how would you stay open for business. And that's one where you're able to double dip. You're able to not only look at okay, I'm doing this in case we have a pandemic, but you're able to devise it so that if there was a flood, if there was a bad storm, if there was, like the snowstorm in Colorado and Wyoming and western Nebraska right now, we've got 3 foot of wet snow on the ground. People are staying home. So, how do you stay open for business during that? And so we're a lot better off there than we were. And then on the economic risk side, we anticipated that GDP drop of 3%, and it's really not too far off from what we actually got. I had expected the asset default rate to spike. Now that didn't happen, but mainly because the central banks really jumped in, and it'll be interesting over time to see if we pay for that down the road. Interest rates were brought down. The liquidity thing. If you're selling, who's buying? Now, in reality, this spring was, the insurers were buying. The insurers should have been buying. There was a huge opportunity to get really good deals for about a week and a half, and where other people with assets were trying to get rid of it. And the insurers are a natural sink for that type of thing, because we hold reserves. We have ALM. We're matched up. We're in better shape for that type of event than somebody else is. So finally, I'm sure you're dying to hear when I actually did this. This was an Iowa Actuarial Club presentation from 2007. They have their annual education day, and actually I just spoke at that. It was interesting. I spoke at it last month, and when the person asked me to speak at it, he had seen these slides from 15 years ago, and really encouraged me to do kind of a, well, I told you should worry about this, and I hate to do that, because everybody has other things that they're worried about as well. You have to prioritize. But at the same time as SARS was happening, right after that, there was a book by John Barry, The Great Influenza, or the Great Influenza, and he told this really good story, and the book ended up, President Bush ended up reading the book, and coming out of that kind of set up a task force to look at what would happen if an influenza pandemic were to happen, because Barry's book talked about 1918 quite a bit, and it was one that before that you really hadn't seen. There were a couple books out there, but not very much, not nearly as much as you would have expected. And so they came up with the federal government came up with these 2 scenarios, a moderate and a severe. And what you can tell from this, and I'll try to move my arrow up here, is that you're starting off with 300 million people. That's a 2004 number. And then you got a 30% have cases. That's the same. Half of those people, all these percentages, all these percentages after are deal with dividing by the 90 million. So in terms of people who actually go in for care, half of those do that in both scenarios. And then for hospitalization, that's where it splits apart, with the moderate scenario, which is similar to the minor pandemics in 1958 and 1968. You get less than 1 million, and then only 100,000 go to into the hospital. And what you notice, though, is that the deaths is higher than the number. It's not that you have to be on ventilation to die. So out of these 64,000, maybe half of those people would die, but there'd be other people who died without even coming into the hospital, or that died before they went into ICU care. Where with the severe scenario, you get 11% of that 90 million that end up in the hospital. and then you end up with a 2% death rate overall. So that's kind of the base that you start from, that you work with. Now, Jim's report came out in 2007. I actually did a report, and I've put the link here, this last year. I actually did the work back in April, and then we finally got it published in January, kind of looking for a place to publish it. And there's some differences between what he had done and the current, and a lot of it is the demographics. The U.S. population is 10% larger. It's older. I define, and we're going to come back to this in a slide or two, this J curve. It's a J-shaped mortality curve for excess mortality. That is one that, if you're a life insurer, group life really isn't impacted because of the age groups that have been hit with the mortality. And even where it is impacted out at the 70s, 80s, 90s, if you have a life insurance policy, the company already has quite a bit of reserve set up too, so the net amount at risk is not as large. So the impact on life insurers is not nearly as much as you might think when you have an excess of 15% mortality like we do this year. Another thing that I found, and I worked from the ACLI fact book. They put out that annual book, publicly available. But life insurance as a product line, out of the total profits for a life insurance company, have become small. Really, life insurers have become annuity writers, so it's assets under management that matters. So as I worked through it, what it ended up being was the biggest impact. I mean, you could go back to his 2007 report and just use those numbers. The biggest impact was just that the tax rate had come down from 35 to 21% with the tax bill from 2 years ago now. And the result is that with the moderate scenario, which we're above that now, but it was only going to expected to take a little over 1% of surplus, or almost 5% of RBC. So it's not, and I think that's how it's played out as well. It's been a bigger issue on the health side, but on the health side, the bigger issue to me is just how people are doing their deductibles, and whether they're going to make up, like if you didn't go to the dentist for a checkup last year, but you go back this year, yeah, there's going to be some additional, bad things that happen to your teeth, but you're not going to go back and do 3 cleanings. So that became an issue. So this is the where I talk about the J curve. This is where this is coming in, and what I've done is looked at, and this is based off of Jim's report, and then adding the pandemic from the past year. What I've done is each one of these curves, the area under the curve is the same. So it's all dealing with this same, I think it's 0.6% mortality. And so there's the flat, the level scenario. Then there's the U-shaped curve, which is just a seasonal. That's this kind of rust colored one where you have high mortality at older ages, but also some higher mortality at like less than 5, very young children. And then you have the 1918, which is this what we call the V/ curve. That's it's like a grayish purple here, and you see it peak here between 20 and 40. So you see that the impact on different age groups is huge for that one. That if that one happened today, it would be a lot different solution and a lot different answer for group life carriers in particular. But the other thing you notice is that you had negative and excess mortality at older ages, and so we've actually zeroed that out, which is kind of interesting. They think that maybe the 1889 pandemic provided some immunity to that same strain, which that was H1N1 in 1918. And then so we also, because we can't expect that to happen again, we adjusted, came up with this W curve where you have the excess mortality from 20 to 40, but you also have some excess mortality at the older ages. And so the area under the curve of this gold line is the same as the area under the curve of the gray purple line. And then this year, oops, sorry, for this year, there really hasn't been excess mortality to be measured. I mean, there are some people that have died below age 50, but for this purpose, I essentially zeroed it out below age 50, and then you can see that the huge, the older you get, the more likely you are to die from COVID this year, and that's continued. I've updated it a couple times as we've gotten more numbers in, and I actually thought that might come down a little bit, might change a little bit. It's remained true. So I'm also going to talk about a mitigation survey. Dave Ingram has been doing something. I'm on the oversight group, but and we're getting some. It's somewhat sponsored by the Society of Actuaries, but he's going out and doing, and some of you may already participate in this, and I thank you if you are. But essentially, like yesterday, every Monday you can fill out an electronic survey on SurveyMonkey. It's about 20 questions, and it takes about less than 5 minutes each time. And what he's doing is he's trying to look at the case counts relative to this these mitigations. So it's things like washing hands, avoiding large get-togethers. Are your nursing homes restricting access? Just a whole litany of things. Are the schools open or closed? The only one that has actually come back as being correlated in a big way is avoiding the large gatherings. So that's the other ones, not to say that they don't help, but we don't have enough numbers to really get into this is beyond 95th percentile or something like that. But the large gatherings really did seem to matter. If you're interested in participating, we're still probably going to do it through April. You can click on that SurveyMonkey link that's on this slide. And then one of the recent reports, I also put the link in there as well so you can see some of the slides. Now, I'm going to go through a couple of the slides. They're in a recent report here where you can see what we're looking at here is the net infection rate, or the new infection rate. And what we're doing there is taking the most recent day and dividing it by the most recent 2 weeks. And what you're looking for is, it's a 14-day thing. And then we average that over the 2 weeks. So you try to get past the Saturday, Sunday anomaly where a lot of states aren't turning stuff in. Now, a number of states, we're starting to question some of their data. They're like Iowa had this huge increase, and then they backed out the exact same amount, like 2 weeks ago, and didn't announce anything either time. Missouri had something like that just recently too. So you need to be aware of that if you're looking. What we're using is the Johns Hopkins data. I think there's a number of credible sources out there. I know I look at the Washington Post as well, but I know there's others. So here you can look at the last couple of weeks that the new infection rate has come down some. The couple of weeks before that, it had been going up. So it's better to be going down, but you want to be below that 7%, 7.1%. That gives you a chance. That's consistent with an RT, R sub T that's 1. So really what you're trying to do is get to where you're reinfecting fewer people than you started out with. So if 100 people have COVID, you want to make sure that the next cycle has less than 100 and it kind of dies out if that happens. The concern that you have right now is that we're going in the right direction, and let me go to the next. Here's another piece of data where you can look at by state and per 100,000. And like I said, the Iowa and Missouri numbers are kind of not necessarily credible right now. Actually, this is the slide I wanted to go to, and then I'll come back to the one right before it. With this one, this is the historical net new infection rate, and you can see that it's coming back up here at the end. It's just, and I think the data point is down here now a little bit, where it's just down just a little bit, but it's still way too high to be coming out of lockdown. I think historically, and this same thing happened in 1918, that everybody came out of lockdown too soon. You're better off to stay wearing masks and socially distancing, and just for an extra week or two, and you could really knock it out. But that's not what we're doing. This one is kind of interesting, and it's only been in the last couple weeks that we've had enough data to be able to show this. Dave's been taking 5 states with the highest compliance, excuse me, and comparing it with 5 states with low compliance. So let's say, and Minnesota has actually been a state with high compliance. I don't know if it's in the top 5, but it's been close. But let's say, just as a representative, that 70% on average of people are wearing their mask in the states that are high compliance, and 50% are wearing their masks in the states that are low compliance. And then this compares, well, what are the cases? And what's shown is that if you take care of your business and avoid large gatherings and things like that, it makes a difference. Which that's a big conclusion from this study. This is I've tried over the since I've been out on my own. I have a Twitter account, and what I try to do is if I'm thinking about something, I try to do a brain dump. And sometimes it's to remind me to, because I do a monthly newsletter as well, it's to remind me to write something about this in more detail. But sometimes it's just, hey, here's what I'm thinking right now, and then to look back a year later and say, does it make sense? Does it not make sense? So this was a 2-tweet sequence where I essentially said, yeah, we're only at 68,000 deaths right now, but I don't see the will to continue the mitigation efforts, to where I expected to see, the case counts would go down, and then we'd have a bunch of waves, and we wouldn't actually ever get to zero until it kind of burned out on its own with herd immunity. And I hope I'm wrong, but and the timing on some of this was certainly wrong, but the methodology, I think, unfortunately, is still accurate. So this is looking at a couple of states in particular, regional states here, including Minnesota. Where you can see that there's differences between the states, and I'm not sure there really are that many differences between the states. I'm wondering if it's a reporting issue in different places, because I don't know as there's enough of a difference between the states. So that's kind of interesting. So in regards to actuarial practice and what should we do differently? I mean, we're in such an unusual place right now, and we were a year ago before the pandemic started. We were at 100, and I think we were at 105% debt to GDP at the time. Now with the current bill, that'll take us all the way up to 130% debt to GDP by the end of the year. It's just an uncharted territories. I don't want to get too much into a finance discussion here, but a lot of times I'll talk about the Reinhart Rogoff This Time Is Different book, where they looked at how often does this happen, and what is the ending result? And what they found, looking back over 800 years, is that when you get above 90% debt to GDP, that eventually there's a problem and something triggers it, and you get some type of either a devaluation or an actual currency default. One of the things that is confusing now, because I've thought for years that, the dollar's gonna crash, but it requires other countries to be more fiscally responsible, and because everybody's being fiscally irresponsible, it's kind of unclear how that all plays out. So, like I say, the environment from a year ago was a place we hadn't been before. The interest rates were already low, so it was hard to really find ways to stimulate the economy without printing money and buying assets. So as a result of that, these rules of thumb that we always use as actuaries, we need to rethink those. Anytime you're doing kind of a quick and dirty analysis, you might want to actually do the run to make sure that rule of thumb still works. In terms of, if I'm running something out 20 years, Well, I know my PE, I would expect it to be such and such, or my present value, I would expect it to be such and such. So going back to first principles is important. So the things that I think, I'm wondering, but really what I'm saying is I think these are things we should be really concerned about. Central banks have been the lender of last resort, or at least offering to be the lender of last resort. Um, you know, it's unclear that that's able to continue going forward with those high debt to GDP. At some point, that blows up. It might not blow up in the U.S. first, but it'll blow up somewhere, and that'll have repercussions elsewhere. Will the vaccine have lasting immunity? And there's so many variants, and by not locking down and getting rid of this thing, we're increasing the chance that we'll have new variants that will be worse than, in the results in terms of higher cases, higher mortality than the old ones. Everybody's evolving, so you have to adjust with them. And climate change is still out there. We've got these zoonotic diseases where we continue to have higher population growth, and so we're cutting down places where we hadn't lived before, and these viruses had lived within other animals, mammals, reptiles, and when we go and disturb them, then they get into us, and they react differently in us than maybe they did in bats or marmots. So there's questions about whether actually that 1889 pandemic, there's some people out there thinking, well, maybe that was caused by coronavirus. I don't believe they have been able to go back. The 1918, they were able to go back into some bodies that were in the permafrost, and they were actually able to get some of the virus and sequence it once you had that ability. 1889, I'm not aware that they have access to that. And if you're a pension person, it's always a good time to review your valuation methods. This one I don't want to spend too much time on. It's just a set of symptom clusters that I've kind of pulled together from a number of different sources. Where you start getting into trouble, this severe level 1 on bullets 5, 6, and 7, 1, 2, and 3. The fatigue is kind of low level symptoms, and they seem to get those combinations that start off with the headache, and a lot of people have that loss of taste and smell, and they get some fever and fatigue, but it doesn't really go a lot beyond that. But then you get into the people who have the brain fog. Then all of a sudden you're getting more cognitive issues, and apparently the muscle pain comes at that time too. And when it gets even worse is when you start getting into the digestive system and into the lungs, and that's where you end up on a ventilator. The one I do want to talk about real briefly is the long haulers. That's something that I think the insurance industry and actuaries in particular need to be thinking about. This is very similar to what was seen 100 years ago in aftermath, that people became uh, uh, disabled. And some of them, would get better within a few months or within a year. There was another group that it would last about 5 years. And then there were others who were disabled literally for the rest of their life. And we're seeing, there was one study where it said 75% still have at least one symptom months later. And we're not a year out, so we don't know. It's same with the vaccine. How effective is it a year out? Well, we don't know until we've been out there a year. So those are all kinds of things to keep track of. And the long haulers, you see these things about this multi-system inflammatory syndrome, and there's a couple of other things that it's all tied to this inflammation, and I think that's what the long haulers is as well. And I think it's when our human immune system is actually reacting to the virus. It's as much that we're doing it to ourselves, as opposed it's you heard it referred to as ARDS, this acute respiratory distress syndrome from 100 years ago. And it's very similar to the way that a human reacted to poison gas attack. And so this cytokine storm from 100 years ago, we're still seeing today, just from a different cause. And a lot of those, you get the heart issues. The Florida basketball player who collapsed on the court. I'm assuming this is what he had. But you see blood clots are a really big deal, and that's becoming an issue with with one of the vaccines. Although I haven't seen anything that makes me think that that's a real thing. That people who get a vaccine are likely to, some of them will have blood clots, and so a few people have had blood clots, and you got to compare that against the number that we're expected to have blood clots with no vaccine. So, we worry about the smell and taste. That's another big one. So this is a chart that shows the advantage of having a national data collection. We shouldn't have to be using Johns Hopkins and the Washington Post to collect data. This is out of the UK. It's the ONS, the Office of National Statistics, and the source. The people, there's a group of actuaries, and Stuart McDonald is one of them. I've met him. He goes by Actuary by Day on Twitter. And he provides a lot of this information. And if you follow him, then he would forward other things that you might be interested in following as well. But what he's showing here is that for their most recent wave, that the excess deaths is almost back to this red line, which is the average of the past 5 years. So you can see the big spike in April. I mean, keep in mind that in the UK, you list the month last and the day of the month first. So this is April. So you had the spike there. You had another spike late in the year. You have some discontinuities in this because of bank holidays and reporting. But it's a very good way of looking at the excess deaths, because, there's people out there saying, oh, the deaths, from COVID, they're, it's not caused, it's a bigger deal. The lockdown is causing more deaths than COVID is. And so they've been able to use this type of analysis. I mean, it's not. Yes, there are issues, mental health issues and things like that. Nobody likes to be in lockdown. Nobody likes to give up jobs. But it's not from a health standpoint, it's kind of a no-brainer. Okay, so there's other interactions. These, the deaths of despair, people with mental health struggles from being in lockdown. The opioid crisis had been getting better. Now it's had another surge. We also have the people overusing alcohol and drugs. You're seeing more suicides. You're seeing more people afraid to go to the hospital, and so they're dying of heart attacks at home. You've got those people who would go in annually to get a cancer checkup, get their mammograms and just regular checkups. They skipped those last year, so now the next time they go back, where maybe it was a low level cancer, maybe it's advanced now, to where you're likely to have some mortality interactions from that. You've got the comorbidities. Malaria is one that you worry about, especially in Africa. And one of the things that I highlighted here is the glasses. I've seen this a couple times now, and it's kind of intriguing because it makes me think there's something I don't understand. If you're wearing glasses and it made you, if you had glasses on, you were a third as likely to get a case as you were without the glasses on. And initially people were saying, well, it's because you touch your face. Well, that doesn't make a lot of sense to me. It makes me think that there's it's an airborne disease, and it's entering potentially, through your eyes, through the tears and things like that. So I'd like to see more work done on that. But if you're going to a crowded place and you have the option of wearing glasses or your contacts, you might be safer to wear glasses or wear some, if there's enough sunlight or whatever that comes in, maybe even wear, if you don't wear glasses, wear some sunglasses or something like that. So there are a lot of similarities to what we've seen in 1918. I actually, many of you, if you, and I'm not sure, I know it's on the APC now, but if you were studying for exams after like 2007, you probably read a paper that I did on the 1918 influenza. And so there's a lot of similarities that we talk about there. You know, I mentioned before the reopening too soon, that's a pretty common one. You know, the mortality, the excess mortality, it varies. You know, this pandemic, it's mostly old people. You know, the next wave, it could be different. You know, 1918, it was very much people 15 to 35. I mean, the mortality data that was collected was all in 10-year increments. And so it's hard to really get a feel for, was it 15, was it 20, was it 25? What we do know is that people were much more likely to just die very quickly. Like, you know, you wake up and you're healthy and you die before you go to bed. This pandemic doesn't move nearly as quickly as it did in 1918. You know, we're worried about the mutations. This B117 from Brazil is the main one that they're worried about. But, you know, there's similarities in the South African variant. There's one coming out of California. You know, I think the B117 was the one that just went through UK and caused a big difference there. And there's lockdowns in Italy and other places in Europe now too. So it's really the people that have dealt with this the best are the people that you know, took it seriously on day one and just kept it out initially. Once it gets in, it's hard to eradicate it. I mentioned some of the post-pandemic issues. Like I said, those are similar to what we saw 100 years ago. Fertility. 100 years ago, there was a short period of time before the Roaring 20s where fertility was low, and then it kicked back in. We're starting to see a number of studies now where you know, we're having a low-level baby bust, and you know, it's very different from 1918 in that the Fed had been created. It was created in 1913, but it really just sat on its hands. You had so many things going on right then. You were just finishing, you know, the World War I was still going. By the last wave, World War I was done. You'd actually had a small, it was more than a recession. People would say it was a very short depression. And then all of a sudden you're into the 20s. So a lot going on back then. There's a couple of links here. I've got just the general links to the study note and some of the other pandemic articles that I've written is the one at Rudolph Financial. The one on my LinkedIn feed is something that I read this last year. There were I ran across two different graduate level theses talking about how people in cities reacted in 1918, and then the other one was how rural areas reacted in 1918, and they were Nebraska specific, but I compared them, kind of did the old actuarial compare and contrast between them and posted that as well. So that's kind of an interesting read, and I think an easy read. The impact on actuarial practice areas, it varies. Like I said, for life insurers, the bigger deal is the assets. You know, the Fed really bailed out all the asset managers, no matter where they're coming from, or individuals for that matter. You know, and we probably go off on GameStop and how that impacts everything too, but we'll stay away from that today. You know, for life insurers, the bigger deal is the interest rate guarantees. Rates are low enough. The insurers need rates to go back up. That's true for both deferred annuities and life products, universal life type products, because now the annuities do drive the business model for life insurers. For pension plans, it actually, you know, the asset side could be bad with returns low. you get the change, people leaving the workforce, and to some degree, it'll be interesting to see the next filing of Social Security in terms of where it's at on a fiscal footing, because all of the deaths at that old an age, um, it will help some, but I don't think it'll help a huge amount. If you had deaths, more in my age group, more in the 50s and 60s, I think that would have a lot bigger impact on Social Security and other payout benefits for annuities. Health insurers, we talked about the deferred care and the deductibles already. I mean, that's the big thing, and I'm sure what I saw is public companies were reporting that some, they really didn't talk about it, but some were holding a reserve and some weren't. And it'll be interesting. I've seen some people say that a number of companies, public companies, would be extremely profitable over the next couple of years because they'd be releasing that reserve, because they were using that as an excuse to keep their premiums up. And so if their profits weren't showing the excess, if your cash flow last year was much bigger than your profit if you set up that reserve. So it'll be interesting to see how that all plays out and how the regulators react to the premium increase requests, or what they do with premiums. Long-term care, that has a lot of moving parts, and it's been an issue for a while here with low interest rates. But now people are afraid to put somebody into a nursing home. It's totally different from when these products were originally priced. And I think we're back more now today to where we were when the products were priced. So that'll be interesting to see how that all plays out. And obviously the deaths in nursing homes, that's going to release reserves for the long-term care writers. If that's their only product, some of them, were really struggling. So it might be something that gets them through this period. I think going forward, we'll see product design changes more with home health care, or more flexibility. I've seen some products that were more tied together with annuities, to where you could use your deferred annuity to pay out a nursing home, and have that be taken out of your assets, and then that just reduces the amount that you get at death later. And then disability, that's the one that I would be spending the most time on if I was an insurer, in terms of trying to figure out what kind of reserve I should be setting up today to cover these things that I know are coming. And those longer term issues are a big deal. The property casualty insurers, they're spending a lot of time in court right now looking at business interruption, where restaurants and other companies that had to close are essentially saying, oh, I thought I had business interruption insurance, but you're telling me it's not covered. Why not? And it's apparently pretty clear in the contract language, but there are a number of courts that have ruled on either side of that. So that's one that remains to be seen, if there's going to be a consistent answer or not, internationally even. And then auto refunds, many of us aren't driving as much, and so there's becoming many of the companies reduced rates for that period. But I noticed there were some things in the paper just in the last week kind of questioning whether they had done that fairly. So on the risk management side, there's a lot of scams out there that people are trying to do everything from steal your stimulus check to use telemedicine fraudulently. I'm personally worried over the next year internationally about food security. I know, there's a lot of pictures, and I think Dallas is the one, because of the way they're doing it, that ends up in the news a lot, because you can get a really good graphic presentation of cars that are, 1,000 waiting in line to get food. But I'm really worried about with trade restrictions and things like that, how that impacts food security, in the Middle East and places like that. It reminds me a little bit of the Arab Spring, and that didn't necessarily end up very well. So for healthcare practices evolving, many on the call know this better than I do, but we're finally moving towards telemedicine in a state that has a lot of rural hospitals and healthcare. That's huge here in Nebraska. They're still trying to figure out the supply chain. I hope there's more going on than I'm hearing about on that. Seems like there are ways to do that by, charging a little bit more, and then saying, okay, I need 20% of my supplies to come from a domestic provider, and then I'll subsidize that domestic provider who can't compete normally with an Asian country and no minimum wage. So you got 20% of the rural hospitals were at risk before this happened, and several of them, I'm already seeing some of those are shutting down. So it's the whole issue of how, if you had within the hospital system, you had people who were really busy, and then you had other areas like urology clinics that went to the payment protection plan to stay open and not have to lay people off. So you have just the fact that we're in lockdown. You have mental health issues, domestic abuse. Just how are kids developing? Are they developing at as fast a rate as they would have if they were going to school? Just all those kind of issues. I'm going to skip over the deterministic stress tests. Those kind of speak for themselves. And then some things that coming out of this, what should we do differently next time? What could we do better? The unemployment plan is designed to be a stabilizer. It's supposed to be automatic, that it kicks in. It didn't work very well this time. It's very inconsistent from state to state. And there are probably places where it needs to be. It may need to be that you need to be able to prove what you were making before, and you get a percentage of that, because certainly unemployment in New York City, you can argue that it should be higher than it is, in rural Nebraska. So the Europeans have a furlough system that allowed people to keep their health care even as they were let go from their job. Right now, with everything tied to healthcare here in the United States, that has also become an issue. National healthcare is some type of a basic plan would be another way to do that, even if it was just for the proactive parts of healthcare. And on the financial side, I mean, allowing creative destruction, we're kind of picking and choosing who gets to survive and who doesn't. Why we're saving cruise lines just makes no sense to me. They're not U.S. companies, and yet we've thrown a lot of money at that. And so I think, especially if the Fed loses control over the financial system, I mean, you could still see defaults spike up. You might see, in fact, I would actually expect that we're going to see with this $1.9 billion, we're going to see some inflation, but eventually demographics are going to push interest rates back low. There's a lot of bubbles out there. A lot of the low rated investment grade bonds, anything with the word collateralized in it always worries me. But you get housing. I heard a podcast yesterday where they were talking about how Las Vegas homes are back to getting 25 offers for every house, which, I mean, they were kind of the key example of the blow up from 10 years ago. And it's back, and I've heard the same thing about Chinese homes, Canadian homes, just all over the place. There's housing bubbles built up. So these we'll come back to if we don't have any questions. There's a lot of questions I have out there. Why aren't stewardesses all sick? We worry about airplane travel, but we really haven't had excess morbidity in people who are in the air every day. So the SOA has been doing a lot of research projects on COVID. They have a landing page within, if you want to go there directly, you just go to the SOA.org and then go under research, and then there's a COVID tab. I listed a few different Twitter accounts that are interesting. Some of you may know Mary Pat Campbell. She's set up this news actuarial that comes out with a lot of things, and she's picking up some of the things from the UK as well. Actuary by day is Stuart McDonald, and then Dave Ingram, I mentioned him earlier as well. So we're a few minutes early. One comment I guess I'm going to make here first is that one of the things that I ran across just recently is this chart from Australia, that when they came out of lockdown, that their cases of the common cold just skyrocketed. And it's just something to be aware of, that, you know, we're spending a lot of time on COVID, but we need to start thinking about, well, how will this impact other diseases as we come out of this? So I'll put up this quote here. This is from, it's like 1919. So it feels very recent, but it wasn't. These are actuaries, and I believe both of them were president of the US based, the Actuarial Society of America eventually, I think, became the SOA and the CAS. That, you know, we've had several mergers and splits along the way. But these are leaders in the actuarial profession. So, Brianne, do we have some questions, or should I continue rambling?
Not yet. So once again, feel free if you have questions, put them through the chat and I will bring them up to Max. Otherwise, you can continue until we get some more. Or if anybody else would like to speak up, I think we're at a point where you can just say your question. We did get a question as, how do you think cryptocurrencies will mix in the financial system going forward?
Well, that's interesting. It's a little different than a COVID question, but it's actually something we were talking about even right before the call. Yeah, I'm not a big fan of cryptocurrency. I see, you know, I think I've heard that 90% or more of the cryptocurrency that's out there is owned by just, you know, half a dozen people. And my guess is those people, because of who can afford the to mine the Bitcoins type things, that you have to have a cheap electrical system. And so you've got people in China and North Korea and Ukraine are some of the primary, and Russia are some of the primary Bitcoin miners. And so, yeah, you can, there's an argument there. I mean, the central banks are doing a poor job over the last 20 years. So there's room for something. I would argue that if Facebook a couple of years ago, when they were talking about coming up with their own cryptocurrency, if they had backed it with gold, I think that would actually work, and you could go around the country and the limitations of being country specific currency. But otherwise, I don't, you know, I can't think of the name of it, but the blockchain that backs it, that's here to stay, and that's really good, and has a lot of different uses. But crypto itself, I've stayed away from that.
Thank you. Another question: is there any data or projections about what numbers would have looked like if we hadn't done any lockdowns? I think this is sort of stemming from the idea that, hey, COVID's not a big deal, and there's a portion of the population that they don't realize that there is some lockdown actions that have been working. So is there any comparison if we didn't do lockdown?
Well, Sweden didn't lock down, and their numbers are quickly getting to be not as bad as the UK and the US, but that's because they are not huggers. You know, they kind of naturally take personal responsibility for their own care. So, but they've had a number of waves, and it's been getting worse. I think, you know, the counterexample there is, have lockdowns worked? And you look at New Zealand and Australia and Thailand and Taiwan and several of the Asian countries, to where, if you take it seriously initially, even just for a short period of time, that, you can move on. That it's we've gotten into this mindset that, our personal freedoms are more important. And I guess I don't agree with that. I'm happy to wear a mask to save somebody else's life. That doesn't seem like that big a constraint. I stop at red lights. If you're not willing to wear a mask, then why do you stop at red lights? Try to think about what the comparison is there.
So going on in your presentation, you had mentioned the long-term care, that it has been an issue and will continue to be an issue. Do you have any ideas what an effective insurance product solution could look like?
Yeah, I like some of the ones that I'm hearing about now. There's a couple products, and I think I remember what company it is, but because I'm not positive, I'm not going to mention it. And they're probably not the only ones doing it. But these combination products where you build a long-term care policy that has home health care options into some product that is accumulating an account value. So whether it's a deferred annuity or a universal life type policy, I think that can work. But it has to be really flexible. And I think, the current pricing systems will work with that. I don't see that as an issue either. But like I say, there's probably others on the call here that know much better about that than I do.
Will a COVID infection eventually not require a multiple week quarantine? So comparing to the flu, we'd had a lot of comparisons with the flu. Flu, you have 24 hours and life returns to normal. Will COVID ever get to that way?
Coronaviruses in general are the common cold. So my thought is that this coronavirus wants to be the common cold. It wants to be an inconvenience. It just wants to live. It doesn't really care if you die, that causes it a problem. So the question is, and I think all coronaviruses probably started out like this one, but thousands of years ago. And so they've evolved over time. The question is, how quickly does that evolution happen? Is it 1,000 years? Is it 6 months? I don't think anybody knows. It doesn't appear to be 6 months because the mutations aren't happening that quickly. But I think eventually this will just be another common cold. But my guess is it's probably 100 years from now as opposed to 2 years from now.
So there's actually two different questions about excess death. So one was sort of focusing on the deaths that are from COVID. Are they an acceleration of deaths that would already have been occurred in the near future? And the other sort of side of that question is, with the long haulers, with that extra mortality in terms of a table rating, how long would that be taken into account for projecting future mortality?
Well, the acceleration, they've shown to be no. That there was talk early on that, well, these people are going to die anyhow, so why do we lock down just to save somebody who's going to die next week? And they went back and looked at, really from an underwriting perspective, and on average, I think these people, even at the older ages, still would have been expected to live 10 years. So if you think that 10 years is an insignificant amount of your life, then okay, then let them die. But I don't. I think if, that's a period of time when, you probably have grandkids, you're helping out with different things, to where I think they've shown that to be not true. And the other question was about long haulers.
Yeah, so how long should the excess mortality or the table rating be taken into account for projecting future mortality?
Well, there's a question there about whether the heart issues, how much excess mortality you're really going to get from that. That might be one where you have excess mortality over the next couple of years, but then the risk after that becomes a disability risk, with very minor excess mortality. They didn't really keep track of that 100 years ago. But when I've heard medical people talk about, well, there's other things that cause this ARDS and this long haulers type thing. It's representative of a virus, not the coronavirus, not the influenza virus. It's just something that when you get a virus and your system kind of goes into overdrive to fight it, that's the issue. And because the coronavirus is so prevalent that we're seeing it a lot more right now, but it's something that it never went away. So it's something that you already have somewhat in your mortality table just from normal viruses. It's just a matter of we're going to have to figure out how to anticipate some of these things before they happen. I don't see the mortality from long haulers being a huge deal unless we get a wave where it impacts 30 and 40-year-olds. As long as and a lot of the long haulers have to date, at least the ones that you're seeing anecdotally in the newspaper, seems like a lot of athletes have been hit, but they just become disabled. They become fatigued. They get chronic fatigue syndrome. They're not, they walk out to the mailbox and they have trouble getting back to their house. People who were marathon runners before that, but they don't die. They're not talking about them dying. So I think the morbidity and mortality is a separate question there.
Is there any data on state-by-state lockdown differentials that support your view on the effects?
Yeah, I think the slide with the top 5 and bottom 5 is going in that direction here. This slide, because that takes into account where schools were locked down, where schools were closed, where large gatherings were not happening, and the ones that did those things had lower cases than the ones who didn't.
This will be our last question in respect to our time. Do you put any weight behind the theory that COVID-19 started as an accidental lab leak rather than from animals or bats? And then the follow-up to this is, do the things we can learn from this pandemic change if it was a lab leak?
I'll answer the second one first. No. You know, some of the stories that you hear out of the U.S. About how they, I can't remember in the one movie in Contagion, don't they, drop off with the UPS service, this highly contagious virus, and they leave it outside the door, and the right person finds it, but there've been all kinds of places where in the U.S. where we haven't treated these horrible viruses in the way, with the Brinks truck and things like that. With the lab leak, I know that's a story that keeps coming back. I think the guys, I thought it was going down, and then they had the team that went to China, and their public comments were so poor that all of a sudden that story came back. I don't give a lot of credibility to it, and to some degree I don't care. I don't hear anybody saying it's something, if somebody is releasing something like this on purpose, then yeah, I care. But if it's an accident, an accident could have happened anywhere. But I think it's much more likely that the virus was loose before this. And my understanding is that there's a bat population south of Wuhan that is very likely to be the source, and that it was actually probably loose in that area among humans for up to a year before somebody brought it up to one of the meat markets. And so it was only once it got into the meat market that it got into one of these kind of another type of mammal where it mixed there from the bat. You went from the bat to some other animal, and then from that animal to humans. It's complex the way it happens, but it's like 1918. That one, a lot of people think that it came loose in Kansas. So whenever you start hearing people say, oh, we're going to blame China. Well, do you blame 1918 on Kansas farms? Do you shut down all the 4-H programs with the kids who sleep with their hogs and their chickens? And are in their, it was like H5N1, the bird flu. The early cases there were from elementary school kids that were taking care of their chickens, and they lived, it was very poverty type situation. The chickens were free range chickens, and at times they lived in the house. And so the kids are sleeping and the chickens are nearby. And when we start doing that, we open up the dialogue to turn back on ourselves when an accident happens in the United States. So I tend to try to get past that. I'm more interested in how do we make it better going forward? How do we solve things? And how do we get past this and get back more to normal times? I'd rather wear the mask an extra 3 weeks to knock it off than spend my time fighting over how it came about. So thank you. I appreciate the time. Those are really good questions for coming in, kind of rapid fire there at the end.
Yeah. Well, thank you, Max, for coming and speaking to us. I really enjoyed your presentation. There's a lot to think about, to digest. Once again, we will post the slides as well as the recording onto our TCAC LinkedIn page, so you can keep an eye out for that. Other than that, I hope you have a great day, and we'll see you at our next meeting, which is tentatively scheduled for September. We are moving that TCA Gulf outing, which was typically in June. We are pushing it out a couple months with the hope that we will be able to get in person at one point. We are trying to get back there, but we do understand there's restrictions. And just like Max said, we want to be part of the solution with our COVID-19 situation.